Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to another episode of a series on India Market Outlook 2023 titled Playing It Safe. In today's episode, we discuss our views on equities. Indian equities have significantly outperformed peers in 2022, supported by robust macroeconomic fundamentals and strong earnings delivery. We entered 2023 with a neutral stance on Indian equities as stretched valuation premiums both on absolute and relative to peers is counterbalanced by robust domestic growth and resilient earnings growth expectations. In our view, Indian equities continue to be supported by strong positive drivers that include 1. Stable domestic growth is likely to support corporate revenue and profitability. Second, earnings outlook remains robust as earnings growth expectations outpace its major peers. Third, the recent equity pullback and strong earnings delivery has created some valuation buffer. And fourth, stable inflow from domestic investors amid inflows into systematic investment plan is a key support for the market. Within equities, we are overweight large cap equities given better relative macro fundamentals and a greater margin of safety in terms of earnings and valuation compared to mid-caps and small-cap equities. However, we are cognizant of potential risks to a positive equity view that range from global growth slowdown and probable downgrades of earnings expectations, above average equity valuations both on absolute and relative to peers, elevated bond yields, and foreign investors selling amid slowing domestic investor flows. Moving on to sector views within equities, we are overweight domestic focus sectors on strong domestic growth momentum and lower linkages to global growth. Further, relative earnings and valuations are more favorable for domestic focus sectors. Our key overweight sectors include financials. Economic growth recovery has driven a broad-based uptick in credit growth. In addition, healthy corporate balance sheets, improvement in net interest margins, and higher loan dispersal volumes are likely to support the sector's profitability in 2023. Earnings expectations remain robust with ahead of markets EPS growth of 47% and 27% for fiscal year 23 and 24 respectively. Higher interest rates are an additional tailwind for the sector, supporting yields and spreads. The sector is also trading at a 12-month forward PE of 20.8x, lower than the market valuations of 25.1x for MSCI India. Industrials are the second overweight sector. The sector benefits from a multi-year investment-led growth cycle with earnings growth expectations for fiscal year 23 and 24 at 33% and 34% year-on-year respectively, among the strongest across sectors. The government's continued focus on capital expenditure coupled with providing incentives to boost manufacturing and infrastructure spending is a strong structural driver for the sector. Further, strong order book, recent moderation in commodity prices, and nascent signs of a revival in private capex are additional tailwinds for the sector. Consumer staples is the third overweight sector. The sector benefits from a broadening recovery in economic growth and improving household income. Further, strong urban demand, easing supply chain constraints, and a sharp moderation in key raw material prices are likely to support volumes and margins for the sector. Though the sector trades at a valuation premium to its history and overall market, with 12-month forward price-to-earnings ratio at 52x compared to 34x its long-term average, stable earnings revision, domestic focus, and defensive nature of the sector is likely to offer stability given rising risk from global macroeconomic concerns. That's all in this podcast. Do reach out to your relationship manager for a copy of our India Market Outlook 2023. And thank you as always for listening. If you enjoyed this podcast, please like and subscribe.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.